Hey folks, how are you? This one's just going to be a little bit of a technical analysis video. So let's take a look at some charts here and we'll go over some psychology and what I think is generally going on a little bit here today in the markets. So financial sector was very, very strong today. So definitely from the standpoint, I thought of it in one key sentence, which is basically risk coming off and risk coming on in certain sectors, right? So there's definitely risk coming off in the tech sector, because if you look at a lot of these names, you can see Microsoft with a couple of pullbacks today, selling those rallies. Amazon as well, definitely some risk off. Look at the Qs generally, so every rally here was getting sold into. Then look at something like Bank of America, where we just had a bull trend day all day. There was a couple of tech sector names that were bullish, like Nvidia with the first bull, but it just resulted in a tightening range. You can see Tesla here with a very bullish day. Could be some risk covering, so Tesla moving up could also be a risk off. We don't necessarily know. Look at things like Visa. Credit card companies are strong this week without earnings coming up. You can see that the financials just stayed very, very strong. And let's just do a little price action on the Qs here. So we're going to start off with, so you can see that we're coming up to this 216.50 area. That was the high of last week, the 17th of April. That would have been 2 Fridays ago, in fact. All right, so that highest point hasn't been hit. So we actually tested it today, first thing, and that's basically our highest point on the weekly chart that we've seen so far. So let's zoom out and see how the price reacted this morning with a gap up testing that price. So you can see, remember 216.50, okay? So the initial move was up and then down. We broke this, and then after this you can see there's a bit of indecision here in the opening bars of trading. Not much there, and you can see we tried to move higher. We moved up to this 216.50 area, and look at how the price reacted there. On very light volume, we pushed above and we saw an initial rejection of this 216.50 area. This was the highest price of that candle, was about there, 216.50.51. You can see we pulled back to the 12 period, had a bit of a lower wick on that candle, and then attempted to move higher again on low volume. Now look at how the price reacted on the second attempt to push past this price. You can see at that time it actually resulted in a bit of selling. There was some sell volume there above average volume the second time. And you can see that we actually managed to break to a lower low. So this two-time rejection of this 216.50 area resulted in a bearish pullback. Now let's see how the price reacted after that initial pullback. Did we see more follow through, or was it just a fake out? So you can see here the price attempted, and we moved up to about 216, and that 216 offer at that point would not lift, and that was in fact a sign that there was continued selling. So the fact that the 216 offer didn't lift at that point, it was a good area to be short, and I actually almost caught that trade, but I didn't quite catch it. So that's it. You can see that we attempted to move lower at that point and then immediately resulted in a bounce. You can see that you're not getting much follow through in either direction, but somebody still sold that. So it makes sense that if we moved above it, we have to now check if that offer is going to hold the second time, that 216 offer. So you can see that we tried it, got really almost to it by like 2 pennies, 215.98, and then rejected it, and we got straight into a second sell. So that just tells you that there's a seller here. There was a seller here, and now he's here. So he's willing to sell at a lower price here. So that means that there's actual bearish pressure. And it's actually an interesting thing, because you call it the phantom seller or the phantom buyer, because he's not really so obvious on the chart. Like if you look at this chart, you can see, yeah, it's pretty bullish, right? We're coming down to the low of the day, why not buy the dip, whatever. But you can actually see, if you were watching the tape at that point, you can see that there's a clear phantom seller the second time attempt here, and then we came up to this 216. There was a phantom seller at 216 that would not allow that price to go higher, okay? So we came up for a second leg down, resulted in a bounce. Now again, let's look for the third time how this price is going to react. Again, coming up to the moving average, we're in sort of this downward channel right here, and we're trying to move up again. And that time, the price didn't even have enough power to get above 215.90 or so. So the top of this candle was 82. And another leg down. Time for a third leg down. Time right into another bounce. You can see, if you were shorting this, you weren't getting much profit on the way down. It just tells you that there's a seller that's present here that's kind of offloading some risk, not necessarily pushing the price down aggressively, but that just tells you that someone's taking off some risk at that point. It makes sense. And you can see at this point, so we had 3 attempts to take a short, 1, 2, 3, and then now the market's pushing up. So anybody who entered here short, unhedged, is now going to be under pressure from this upside move. So it makes sense that we could, in fact, see a higher leg here, and that's what we got. We got a push above this 215.50 all the way to 216. Now let's look at how the price reacted at 216. Again, moving up to the upper part of this range, 216. 25. That's called choppy barbed wire, and we finally got some sort of a bear break, little bit of above average volume there on this 2-minute chart. Let's see if it got any follow through, and it did get some follow through, and we saw a second leg down, again rejecting just under that 216 handle. So again, the price got allowed to move up, and then we're seeing this price fade again, and then that seller comes back at 216. He's back again to defend that resistance, and again, it's risk off in the tech sector on the Qs here. So we saw 1, 2, a third attempt lower, straight into a bull. And then what happened after that? Higher low, and then chop going into afternoon. So now we're in the chop, and we managed to break the low of the day. So definitely there's more selling than buying. That's the bottom line here. And going into 2 o'clock, we bottomed out around this 214.50 area. If you look at this, we're in sort of, again, seeing a lot of these type of falling wedge patterns. And look at this. So we saw from the two-legged bounce, it actually resulted in a two-legged bear, three-legged bear, and then we chopped, inside bar, and then we finally saw 3 lows with no follow through, followed by a sort of a break of this horizontal trend line that you could like draw with your mind, and then a little bit of a higher leg here. Again, none of this is really great price action for day trading, but it's just some sort of analysis, okay? And you can see we're making higher highs, and then it just chopped into the close. So what this price action tells me, just on the Qs, it tells me, again, I'll say it, is that they're taking risk off. Somebody here, the big guys, they're taking risk off going into tech sector earnings. There's no other way to look at it than that, okay? And it makes sense because since the tech's taking risk off, other sectors are putting risk on, like we saw with the financial sector. So there was just some steady buying today in those big financial sector names like Bank of America. Beautiful bull trend day. XLF, same thing. Beautiful bull trend, chop, and then bull trend. What about JP Morgan? Beautiful bull trend and then chop. So you can see that, guys. So that's gonna be my analysis for now, and I'm gonna upload this video today. So it's gonna be my second video today. Enjoy, guys. Take care. Have a great one. See you tomorrow. Bye. Love you. Bye.